The DeFi altcoin boom. I've been absolutely immersed in the DeFi ecosystem rabbit hole since my previous video on DeFi, and this has really just been to try to learn as much as possible about the space and the nature of what is truly fueling this next boom. As many of you may or may not know, I really have not been trading altcoins since the previous 2018-2017 boom, and so I've really had a lot to catch up on from the point that I left off up until now. However, before I get into the video, which is mainly going to be about Ampleforth, which in my opinion is one of the most interesting, maybe one of the best DeFi cryptocurrencies that I've found so far. Obviously there are other projects that are much more complex that have different applications, but Ampleforth just for me really caught my eye, and it's wildly successful right now. It's really growing right now, so I thought it was a great time to cover it. However, I also think that there are a lot of misconceptions about Ampleforth, and I think it's sort of because of how complicated it may seem, because the price on the chart is not exactly what it seems, and many other things like that. But before I start talking about Ampleforth, I first wanted to address something that I sort of touched on in my previous video, where I was comparing the previous 2018 altcoin boom to the DeFi boom. And there were some things that I wanted to amend, and I think this is still interesting even if you're waiting for the Ampleforth content. I first just wanted to talk about this, and then I'll get into Ampleforth as quickly as possible. But the quick thing I wanted to say is that the difference between the altcoin boom and the DeFi boom is really in the nature of the projects, right? The altcoin boom of 2018, that was a much more centralized idea of altcoins and cryptocurrency. People were throwing together white papers, doing ICOs with basic marketing, making millions of dollars, keeping that money for themselves, and then releasing a token on the market worth tens of millions of dollars without like a single line of code being written, right? That was basically the nature of the ICO or 2017-2018 altcoin boom. Now, I think the DeFi boom is very different in that it's a much more mature version of what was happening back in 2017 and 2018, right? And obviously the altcoin market has died off a lot since then. And so the fact that these projects have sort of been able to surge back up and have gained a following and some more hype again, I think that really shows that the projects that are left right now, the projects that are doing well, a majority of them really do have a legitimate function or product that allows them to achieve value. But that being said, you might be saying, well, if the DeFi boom is providing legitimate value and real products, then why are you calling it a boom? And that's really because I still think, although the DeFi boom is much more legitimate and much more mature than the 2017-2018 altcoin boom, I still think the DeFi boom is considered a boom because a lot of the projects that we're seeing right now, yes, they're super interesting. Yes, they do provide some sort of value right now because they're super hyped up. However, in a couple months, in a year, in 2 years, are people really still going to be using some of these decentralized finance applications? My guess is no. I think right now it sounds super exciting. People are really interested in the space, but only time will tell which ones actually end up surviving and which ones do not. However, that being said, I still think the DeFi boom is a very positive step for cryptocurrency markets long term, because it allows the true nature of decentralization to shine, whereas the ICO boom, I think, was just very negative overall. So this is a really good step for cryptocurrency, and that's sort of how I wanted to start off this video. Now, before I get into talking about Ampleforth, make sure to like and subscribe if you'd like to see more content like this, and also make sure to join my Discord group down the description down below. But let's get right into it. Ampleforth has seen explosive growth over the past month or so as people have discovered this project, and it's built around a really cool economic principle of supply elasticity, which I will talk about later in the video, which as far as I know has not really been done in any other cryptocurrency. So I think it's really cool that people are starting to incorporate a lot of these experimental economic principles into cryptocurrencies in order to see how it performs on a smaller scale. However, as a disclaimer, I do want to say that I will be saying some relatively negative things in this video about Ampleforth because I think there are a lot of misconceptions that have to do with it. However, I still think that Ampleforth is an amazing project. I think the developers of Ampleforth, I think they're very smart people. They've obviously planned out everything very, very, very well. And I can tell after I've researched this a little bit, initially I thought, I was like, oh, this is just like an economic experimentation project cryptocurrency. The more I read into it, the more I realized, okay, the team of people behind it are very, very smart, but that still doesn't mean that there aren't some flaws with what they're doing, which is sort of what I'm going to be talking about in this video. But obviously, I still think it's interesting. I still think it's a great project. So that's the first disclaimer I sort of wanted to start with. So what is Ampleforth? What makes it valuable? What differentiates it from other cryptocurrencies? Well, really the two main features or gimmicks of Ampleforth is the rebasing system and the Geyser system. First, I'm going to start off with the rebasing system because this is really the entire foundation of Ampleforth. This is what it's built on. This is what everyone is very, very excited about. And this is what I was talking about earlier when I was mentioning supply elasticity. So the whole goal of Ampleforth is to not be reliant on the price of the market. So the price that you see over here, the fact that it's at $2.50 right now, technically doesn't matter. And before I get into explaining what the supply elasticity is or what the rebasing system is, to give you an example, just sort of to get your mind stimulated, even though the cryptocurrency has only moved from, let's say in this time frame right here, it's moved from $1 to $2.50, even though it's only moved 250%, the reality is that if you had been holding this cryptocurrency throughout this time period, because of the number of times that it has gone through a rebasing period, you would have actually made probably above 1,000% at this point. So even though the price change percentage throughout this period has only been 150 or 250%, the reality is that if you had been holding it throughout this period, you would have made over 1,000%. So that's the first thing to get you interested in what this is and sort of how crazy this may sound initially. So how this works is Ampleforth has a anchor point, a desired price that it always tries to achieve, and this desired anchor price is $1. So this is a very important price because this is what the entire system is sort of based on. So let me give you an example of how this works as if I was purchasing the currency. So let's say that I'm purchasing 100 Ample at $1, and two potential prices, let's just say it could move to within this time frame, is $2 or 50 cents. And so this is just based on the market. Let's say people are buying or selling, whatever. The price can move up or down to $2 or to 50 cents from this $1 mark. Now, let's say I'm buying 100 Ample, but the total number of Ample, so the total number in existence that everyone else has altogether, is 1,000. This is just a made up number. This is an arbitrary number. In reality, the total number of Ampleforth is much, much higher than that. But this is just an example that I'm going to be using, an arbitrary number. So if the price of Ampleforth goes up to $2, then what will happen is within a 24-hour period, if it's at this $2 level, then there will be a rebase that occurs. And what happens during a rebase is the total supply of Ample will change. So everyone that owns Ample, the amount in the scenario that it goes to $2, the amount of Ample, since the price doubled from the desired target price of $1 to $2, the total amount of Ample will double in order to compensate for the increase in price. So if I'm holding Ample and it goes to $2 and it stays at $2 within a 24-hour period, then I will double the amount of Ample that I have, and the total amount of Ample will double as well because it is doubling the total supply. So everyone will have double the amount of Ample in this specific scenario. Now, why does this happen? You're probably saying, oh my gosh, you're doubling your money. Obviously, something has to go wrong here. Well, the whole idea is that when this occurs, when the rebase happens, since the entire supply is being doubled, people logically will sell it in order to try to get the price back down to $1 so that it's at that anchor price. So within plus or minus 5% of $1, it will do the rebasing in order to try to get the price back to $1 by adjusting the total supply. So that's sort of the general idea of how this works. And the inverse is true for if the price goes down. If the price goes down to 50 cents as an example, then the rebase occurs within 24 hours. Then I will now have, in fact, 50 Ampleforth. And the idea is now that it's more scarce, now that there are less Ampleforth in circulation overall, people will be incentivized to now sell it for a higher price in order to try to get it back to $2. So the idea here is to try to stabilize the price by changing the total amount of Ampleforth that is in the market. And the interesting thing that you might start to see once you see this pattern of increasing and decreasing the supply is that regardless of how many Ampleforth you own, you always own the same percentage of the total supply. So if I bought 100 initially, which is 10% of the 1,000 total Ampleforth in this example, then you own 10% of the total supply. And regardless of how the market moves, you will always own 10% of the total supply. So what's important to understand here is that the price of Ampleforth does not necessarily matter as much as people think. Because the thing is, Ampleforth, the whole goal of it is to always try to get the price back to $1. So inevitably, the price will eventually start to go, creak back towards that $1 level. What's important about Ampleforth is when the price settles at the $1 level. So how much market cap there is once the price settles at $1, because if there's a lot of demand for Ampleforth, then the price will continuously stay at $2, and that's what's happening right now, right? There's a lot of demand for Ampleforth, so the price stays at $2. And the longer it stays at $2, the more Ampleforth that goes into circulation until it gets to the point where people have so much Ampleforth that it exceeds the demand for it, and the price starts to go back down to $1. And if the total market cap when you purchased it is now higher when it bounces back down to $1 again. So let's say that I bought Ampleforth for $1 right here in June of 2020. And although it's at $2 right now, it theoretically might not be the best idea to sell because the total demand for Ampleforth could continue to increase into the future, even though the price might not increase, because what's happening is the supply is increasing. So if I bought 100 Ampleforth here, let's say now I have 1,000 Ampleforth or maybe even 10,000 Ampleforth at this point. And it will take a lot more Ampleforth to go into circulation to match the buying and sell pressure to get to that $1 level. So how you measure your profit in Ampleforth is not so much by the number of tokens that you have compared to the price per token. So you're not multiplying, 100 tokens times $1. What you're doing is you're multiplying the percentage of the total supply that you have by the total market cap of the coin. And so this is where a major misconception for Ampleforth comes into play. I've seen this advertised all the time, at least on their YouTube channel, maybe online. I've read a couple things where it said this, and I'm not sure if they're doing this intentionally, although I assume they probably are, because I guarantee they understand this line of logic that I'm going to be talking about. But they tend to advertise Ampleforth as something that's not going to follow the rest of the market, right? It's not going to follow Bitcoin's trend. It's not going to follow the altcoins trend. It's not going to follow the DeFi trend. It's going to create its own trend for price history. And as I was explaining before, the amount of wealth that you have in your wallet does not depend on the dollar value of what it's trading for, but instead on the total amount in circulation, because you own a percentage of the total amount in circulation. And so as long as the total amount in circulation is increasing, then you're technically making money, because eventually it's going to go to that $1 mark when the supply finally meets the demand. So although the price chart, right, it's always going to look different, quote unquote, than cryptocurrency, than Bitcoin, than altcoins, than DeFi, the reality is that if you actually want to see what the amount of wealth in your wallet is going to be, so how much the value in your wallet is going to move over time, then the best way to do that is by looking at the total market cap of Ampleforth, because you can just multiply the market cap by $1 theoretically, and that's going to be the amount of value that you could sell it for at that point in time. And so this is really what, if you had Ampleforth in your wallet, what it would look like in terms of the amount of dollar value that you have. It's not this price. This price it's theoretical. It's not the true price of Ampleforth in terms of the supply and demand. It just represents either increased demand or decreased demand. What really represents the wealth in your wallet is this, which is the market cap. And so what I suspect is going to happen is, right now, obviously, Ampleforth is on its own trend because it's following all the other DeFi coins, it's following the altcoins. However, once this DeFi trend is over, just like the altcoin boom, it's going to eventually crash, the hype is going to be over, and then it's going to follow the supply and demand mechanics of Bitcoin, because if there's increased popularity in Bitcoin, then people are also going to go over into altcoins and look for different investments there. So in reality, what's going to happen is, Ampleforth, they like to say this thing, we're going to be disconnected from the rest of the market. Yes, this little price value here is going to be disconnected from the rest of the market, but the market cap, in fact, is going to end up looking just like the price of Bitcoin, because it's going to become correlated to cryptocurrencies, just as every other altcoin and every other cryptocurrency is also correlated to the Bitcoin price as well. And so you might have noticed that I skipped over one feature or one gimmick of Ample, and that is the Geyser mechanic. Now, in my opinion, the Geyser mechanic is something that they developed, that they created, because they realized the issue that I was saying earlier. They realized that if it was up to the market, the total amount of wealth in Ampleforth, although the price chart is going to look different from cryptocurrency, people are going to realize that the amount of wealth in Ampleforth will follow Bitcoin eventually, and it's not truly a hedge or an uncorrelated asset from the rest of the cryptocurrency markets. And so they had to come up with a solution, which they are testing right now. That's what they say they're doing. They're testing it. And this is called Geyser. And all Geyser is, it's very simple to explain. There is the Uniswap exchange, which is a decentralized exchange, and Ample, they are providing incentives for people to provide liquidity on the Uniswap exchange, and you can look up what that means, providing liquidity. That basically just means that it will be easier for people to buy and sell large quantities of Ample on the market if there's more liquidity. They are incentivizing people to provide more liquidity on the Uniswap exchange by utilizing Geyser, which basically pays them like a staking reward for holding their Ample in liquidity, which makes it so that the liquidity on Ampleforth hopefully will increase as it becomes more and more popular, to prevent the correlation that I was mentioning earlier to Bitcoin and other cryptocurrencies. Now, again, I'm saying this over and over again. This is a very smart solution. This is like a band-aid solution to the issue that I was talking about earlier. However, I do not think this is a bulletproof solution, because I think maybe what they don't expect, I'm sure they do expect this again, they're very smart, and I'm sure they know this, but what most likely is going to end up happening, even though there is increased liquidity and even though they are incentivizing it, the issue is that you can't prevent people from getting scared. In my opinion, once this hype train is over, once the total market cap of Ampleforth starts to decrease, once people start selling, once there's that little FOMO sell-off, I think the liquidity on Uniswap and these other platforms is also going to start to go away. So yes, it does help right now, because if they increase their liquidity in the market, then they can continue to pump the market cap, because there's more liquidity for the people to prevent the selling from affecting the price. But I think this is all going to sort of blow up, and it's not necessarily a long-term solution to the issue that I was talking about earlier, where it would still end up following the price of Bitcoin, altcoins, and other DeFi cryptocurrencies. To finish everything off, I still think Ampleforth is an amazing project. Would I invest in it personally? I think it's definitely a project that's experimental. As I mentioned at the beginning of this video, this is a really cool project because we can finally experiment basic economic factors that would have otherwise been impossible to experiment with on a relatively large scale. I mean, there's no way for the government to test things like this with monetary or fiscal policy in the US, right? It's literally impossible. The only way that we can test different psychological factors like Ampleforth is in the cryptocurrency market. So I love the project. I think they're super smart. I don't know if it necessarily will be successful. I guess that's always the question. Long term, is this really going to be able to provide a value proposition of being uncorrelated with the rest of the market? That's the big question. Would I invest a small amount of money into it just to see how things go? Yes, I think it's an awesome project to support. It's an awesome thing to look at over time. But no, I would not put a substantial amount of money into it as something that would, double in the next couple of years, because I still classified this cryptocurrency as a very high risk investment. Anyways, thank you all so much for watching this video, and see you in the next one.